All right, everybody. Happy Friday. Hope you all enjoyed the week. And better yet, we're off to a good start. What other way to start off a beautiful Mother's Day weekend than walking New York City in the rain, am I right? So what I want to talk about briefly tonight, I've been getting a lot of text messages. And usually whenever the market is extremely volatile, usually I get more text messages from family, friends, old coworkers that I've worked with. And there's been a common theme about those texts. And one word that has been used more often in any of these text messages than anything else has been the word crazy. There's been the word crazy. Hey Tom, this market has been crazy. The volatility has been crazy. I can't believe these stocks are selling off so hard. This is crazy. So it got me thinking. I was sitting at my desk in the WeWork building that I work out of, and I was thinking, I'm like, is this market actually crazy? Or have we reverted back to a time where it's actually normal? Are things actually getting back to normal as opposed to it being crazy? So what do I mean by that? Well, I think one of the main things I mean by that is, we've been living in an environment ever since the lows of 2008 of extremely easy money. The Federal Reserve pretty much buying it all, buying mortgage-backed securities, U.S. Treasuries, keeping interest rates artificially low. And I think that has fundamentally skewed the valuation metrics on Wall Street. Is it normal for a lot of these high beta growthy tech companies to trade at premium valuations, 10, 20, 30 times sales revenues, or whatever you want to call it? So I asked myself, are we getting back to normal, and is this not crazy? I don't know. We'll talk about it tonight on the stream. Let's see who we have in the chat. We have one and only Mr. Ming. Good to see you. Gregory is here. Welcome. Chris Beeman is here from Arizona. FredX. Kenneth, good to see you, Kenneth. Vinny Castellano from Staten Island, always good to see you, Vinny. And a happy Mother's Day weekend to you. Jonathan Richards, always a pleasure. Sally is here, says poor weather. So we have a little bit of a rainstorm for this Mother's Day weekend. I think it's going to rain well into Saturday morning and Sunday. Hopefully it'll clear up a little bit so we can do an interesting stream on Sunday. That is Mother's Day. FredX is here. Lizzie says, what are the interest rates now? Well, the Federal Reserve on Wednesday approved a 50 basis point rate hike. And this is a little bit out of character of the Federal Reserve because if we look at historically, they usually raise interest rates in increments of 25 basis points. A lot of analysts on Wall Street were actually predicting a 75 basis points rate hike, which did not materialize. And I think Fed Chair Jerome Powell came out and said openly that, in no way, shape, or form will we be considering a 75 basis point rate hike. But nonetheless, we got a pretty big rate hike in general. So I just thought it was interesting. Anytime the market is, more volatile, or anytime the market is going down, that's when I start to get a lot of text messages from friends and things. Miss Brown Eyes with the $2 donation. Thank you so much. You were way too kind. I appreciate it. Brian is here. Says, good evening, Tom and everybody. Good evening, Brian. Nick Rocks says mortgage rates are about 5.25%. Good to see you, Nick. And I think you are 100% right. Jetstar says, good evening, Tom. We are headed towards a recession. Very possible. Diamond Dave says, good evening, Tom. Good evening, Diamond Dave. Helen says, good evening. Good to see you. Nick Rocks says, Tom, we've been living in a bubble for over 2 years. Stimulus checks, really low interest rates. We've been spoiled for a while, and now the current environment is insanity. Well put. Laura M. says, hey, Tom, from North Carolina. Good to see you, Laura. Hope you're well. But yeah, I was thinking about it, and, a lot of these businesses that are getting sold off hard, these are most of them, let me say most of them, especially the ones we talk about on the channel, the ones that have earnings, the ones that have revenue, the companies that are profitable, right? These are good companies, and they're still getting killed. But that does not mean we go and buy them just because the stock is down. But what I was thinking about is, a lot of newer people that haven't either, studied the market historically, or maybe they're just getting into the market for the first time. The only thing that they've known is a market with these crazy valuation metrics. PE ratios and 200, 300 PEs. A lot of companies actually don't even have earnings that are trading at a ridiculous multiple to sales, right? So I think now that the Federal Reserve is raising interest rates, I think this could be the one time, or the first time in a long time, where things may be getting back to normal, as weird as that sounds. I'm not sure if anybody is familiar with any of the those fundamental books about value investing, such as Seth Klarman's Margin of Safety, or any of the Warren Buffett books. Even if you just read a lot of the Warren Buffett journal articles that he publishes at every shareholders meeting, you'll sort of see what I'm talking about. So, I don't know. I think that, everybody is so, I'm not going to say everybody, but there's a lot of new market participants ever since the lows of 2008. And I think that they've been getting accustomed to these very bizarre valuations that these companies are demanding. So perhaps in an environment where interest rates are actually potentially normalizing, could we be going back to the basics? Could we be going back to the old school, old timer, fundamental investing metrics where things don't trade at a ridiculous price to sales multiple? I think so. What do you guys think? But it's raining pretty hard here in New York, and it is cold. Let's see who else we have. Hey, War Walker's here. It says almost June and still cold in the East Coast. It's insane. It is insanity. But War Walker, good to see you, my friend. Mickey Handel is here. Hey, Mickey Handel. Savi says good evening, Tom and everybody. Good evening, Savi. Patricia Ivory says hi, Tom. Good to see you, Patricia. Otto is here. Good to see you, Otto. Welcome. Happy Friday to you. Bagels and Walks says have a safe walk in the rain. Hey, thank you so much, Bagels and Walks. WW is here. Always a pleasure. So everybody, just real quick, it's going to be a shorter stream than normal, mainly because my phone battery is on about 30%. So we're going to be doing a quick walk and chat around. Don't really have that big of a topic planned for today, but that was just something that caught my eye. Because, and you'll notice if you're in a friend group and you tend to be the one that really keeps an eye on the market or things like that, you'll notice specific times where you tend to get more messages than not. And I just noticed that word, crazy, and I saw it in like 10 or 15 texts and emails too. I'm like, everybody's saying this is crazy. Everybody's saying this is crazy, but is it crazy? So it made me, take a step back for like an hour and say, okay, well maybe Cloudflare shouldn't have been trading at, a ridiculous multiple to price to sales, right? Maybe a lot of these businesses that have no earnings, right? And we talk about this a lot on the channel. Excuse me. We talk about this a lot on the channel. That look, if you want to speculate in names that have no earnings, once the market turns and starts to sell off, those are the first companies that get hammered and hammered hard. And if you guys are reading the Behind the Street newsletter, we talk about this almost ad nauseum. It's fine to speculate in companies that don't have earnings, but you have to understand you are increasing your risk exponentially, because when the market turns, those are the first stocks to go. In the last issue of the Behind the Street newsletter, we talked about it's always the speculative names, and in which this case, coming out of the 2020 run-up, it was all of those special purpose acquisition companies, right? The unprofitable SPACs. Then it was the very high growth names that have very little earnings but trade at crazy multiples and premiums. And ever since interest rates have been going up, we've been seeing big multiple compression. Right, so as interest rates go up, and these tech companies, the vast majority of their earnings are going to happen in the future. Well, if interest rates are higher now, well, that means you have to apply a different discount rate in your DCF models, and those future earnings are worth less today, if that makes sense. Gary is here. Says, Tom, I think you're right. I'm 70. Hey, Gary, thank you for watching. Warwalker says, let's chip in for a battery pack for Tom. Well, in all fairness, Warwalker, the only reason why the battery is low today is because I was out shooting some standalone walking videos in which I will post very soon. Hey, Tom Burke is here. So, Tom, the S&P chart shows lower highs and lower lows, a bad indicator for months. Good to see you, Tom. Yeah, and I mean, Tom, to your point, we also are trading below the 50-day and 200-day moving average. Bernie Williams says, oh dear, just looked. That is some drop in Cloudflare if that's going to be bad. Yeah, so a lot of those companies, right? That's why all the time, you know, these are very exciting companies. Exciting companies, high growth. But I mean, I have a rule that I just can't buy something if the company's not profitable. And that means I'll probably lose out on a lot of opportunities. But for me, I just can't take that risk because let's say if the company's not profitable, it's trading at a ridiculous price to sales multiple, then they miss earnings, that stock is going to get pummeled. And if you look at a lot of the charts of these companies, like Cloudflare is just one, but another one, you know, Peloton, these things, Peloton will probably go to zero. Oh, we've been talking about that one for months. But I think in an environment like this is where a lot of people, unfortunately, sort of tune out of the stock market. Sort of tune out, they don't look for it, they don't really watch it, but you should be doing the exact opposite. You should be hyper vigilant right now in the market, building financial models on these companies that are profitable, really paying attention to the earnings reports of a lot of companies you're interested in, listening to what the CEO is saying, listening to what the C-suite is saying. You know, what is their forward guidance looking like? Because in really, really severe bear markets, once things turn up again, and they will, you know, it may take a month, it may take a year, it may take 2 years, but there will be more bull markets. You need to be ready to identify the companies that are growing, not only their revenues, but growing their profits. I look for companies that are compounding out their EPS or earnings per share at least 25% annualized growth rate. Very good return on equity of about 25%. Also very good pre-tax and after-tax margins. So I think times like these is when we need to be super hyper vigilant. Hey, Sammy Basie is here. Says hello, Tom. How are you on this rainy night? I'm doing really good. It could be a little bit warmer though. It is quite cold. Michelle K says good evening, Tom. How are you? I'm doing really good, Michelle. I hope you are well, and happy Friday to you. Vinny Castellano says, how about ZI? Yeah, so Zoom Info is one of those companies that is profitable. Extremely, extremely good company. I have a lot of respect for Henry Schuck, which is their CEO. They actually just reported a great quarter, but when interest rates are going up and when the market is in a downturn, usually 7 out of 10 stocks will follow the overall trend of that market. But that is definitely one stock that is on my watch list that once the market turns up again and the stock can break back above its 50 and 200-day moving average, that is definitely a good growth company that's actually generating profits. I did post a thread on Twitter about Zoom Info. I covered their earnings report. If you guys want to check that out on Twitter, you could follow at Walks Wall Street. FredX, good to see you. So I may not be able to read everybody's comment tonight because it's very windy, very rainy, and I'm also holding the umbrella. So sometimes it's hard for me to scroll. Hey, the Ralph is here. Says just tuned in, if not answered already. How much is higher rates affect these companies that were heavy into buybacks? Well, I think in terms of interest rates, it really just affects the multiples that these companies trade at, right? Because you got to think about it like this. This is how I think about it. if rates, let's just say in 2020, whoa, guys, look at these 5-foot deep puddles of disgustingness here. But anyway, so to answer your question, this is how I think about it. When interest rates are really low, an investor will look at a company and say, okay, this is a tech stock. Let's just use a tech stock as an example. We could use any stock as an example, but since we always talk tech, we'll just use that. We'll say this company is not yet profitable now, or let's say they have very little earnings right now. And in 3 years, the company is going to earn $2 a share. Right, just to keep it simple. The company is going to earn $2 a share. Being that interest rates are zero, the company is probably going to have a larger market cap. Oh, hold on. I'm already on 20% battery. The company is probably going to have a larger market cap, thus trade at a premium valuation, whether it's a price to earnings multiple, a price to sales multiple, or something like that. But as interest rates go up, the valuation of that company has to change. Well, why? Because if you are predicated based on future earnings, knowing that this particular software company or tech company, the majority of their earnings are going to happen in the future, but interest rates are higher right now, well, that means the present value of those earnings or the future value of those earnings are now worth less because rates are up. And I think that's what we've been seeing now. And a lot of fund managers and a lot of analysts on Wall Street have been saying the market is really doing the majority of the Federal Reserve's work for it, right? So even though we got a couple interest rate hikes, we got a 25 basis point rate hike, and we got a 50 basis point rate hike, the market has been really creaming these names. And when these names sell off like that, it's called multiple compression or PE compression. And it all has to do with rates. So if you're building a discounted cash flow model or something like that, you have to put in like a discount rate that you factor in the model. So as rates go up, the value of those earnings are now worth less today. That makes sense. But in AMD, just reported earnings. Great quarter, by the way. If you want to check out 2 streams ago, we covered AMD in depth. I think they just announced another buyback program where they bought like $1.2 billion worth of stock back. Hey, Cosmo Scary is here. Good to see you, Cosmo. Welcome. So check out the Empire State Building tonight. It is sort of lost in the clouds, but it looks kind of cool with the blue in the background, doesn't it? Hey, NMB045. Happy start to the Mother's Day weekend, my friend. Cosmo Scary, thank you for joining. Tom Burke says, Tom M, did you see the new EV Mercedes-Benz get 625 miles per charge? I did not see that. Wow. Hey, Alice says, congratulations on 15,000 subscribers. Yeah, so guys, thank you so much for that. That's unreal. That's insane. I mean, that's enough to fill up a small sports stadium. I mean, that's awesome. So thank you guys. It's been a blast. I love these live streams. I get to talk to a lot of very smart and interesting people. So for that, I thank you guys. Because if there are no viewers, there's really no stream, because it's sort of like I'd be talking to myself, right? But let me get across the street so I could turn up my brightness a little bit. I can't really see my screen because I turned down the brightness because my phone is only on 20%. Andy S says, do we get dividends? Yeah, so Andy, funny you mentioned that. I'm actually thinking about doing an experiment, but I'm not yet ready to. Let's just say something is in the works. That's interesting. That's very interesting. Hey, Cooking is here, says your voice is nice to listen to. Thank you. Hey, Leah is here, says hey Tom, it's rainy today, indeed. Balance is hey Tom. I guess it was an emergency. Alright, let me cross the street. It's hard to read the comments. Yeah, so bond yields are going up for sure. Here's I'm gonna give you guys another shot of the Empire. Cosmos says, do you ever grab those newspapers on the street? Actually sometimes, yeah. Because if I'm not, so I get the newspapers delivered to my house, but when I'm not there, sometimes I'll stop in and buy one from the stands for sure. Hey, Cindy Foley is here. Good to see you. Welcome. Hope you're well, Cindy Foley. I see British Grey is here. It says Happy Mother's Day to all the women in the chat. Absolutely ditto. So thank you to all the mothers out there. Hope you enjoy your weekend. Even though it's rainy, it could still be a good weekend, right? Bagels and Walks says you could charge at one of the corner Wi-Fi spots. So I have a crazy story about one of those corner Wi-Fi spots, but we'll tell it another day. I see Axer says hello from Uzbekistan. Welcome to all of our viewers from Uzbekistan. Good to see you. Ali Star says looks wonderful here, but the rain looks intense. It was more intense actually. Not too long ago, it was coming down like gangbusters, but it's actually quite nice right now because it's not windy. I mean, the big problem for me is walking in the rain and the wind. If it's just raining, it's actually not too bad. Wow, but check out that shot of the Empire. That looks incredible. Hey, I see Faith here. Welcome. Hey, Crystal225. Hey, Crystal. Says you're walking my path. Oh, is this really? This is your path to work or something? That's funny. Good to see you, Crystal. Faith is here. Welcome. Yeah, so I think just an overall thought of the stream. I think times like this, especially when the market is really volatile, I think people are trying to make sense of it all, but I think it just comes down to reverting back to the basics and not flipping out and just sort of understanding what is going on and saying, okay, well, do we think it was probably rational for a lot of these companies to trade at such premium valuations? Well, maybe not. And I think that's why famous investors that we talk about all the time on the stream, such as Stanley Druckenmiller, Paul Tudor Jones, Jim Ropel, the number one thing all of these investors say is the Federal Reserve is the driver of the market. So if the Federal Reserve is tightening, that's going to put a cap on a lot of this craziness. Lopez says, what's up, Tom, and other night, brother? Keep it up and good talks. Hey, thank you, Lopez, family Lopez. Good to see you. This is the M34 Crosstown bus. NMB 045 says, Tom, those stocks with solid profits, don't they have the risk of having reached their optimum value point? Tom, those stocks with solid profits? What do you mean by that, NMB 045? So I guess I'm not sure exactly what you mean by that, but there's some, it's interesting. There's some like slow growers out there. You could talk about like the clunky blue chip that are just going to be like your Coca-Colas. Some of them, like a Costco, something like that, are trading at higher multiples now than some of these really, really high grower tech stocks, which is really weird. And usually that happens sometimes after a massive washout. And I think it's just a testament to what investors are craving right now. I think, as we've been writing about in the Behind the Street newsletter that I send out every Tuesday. Also, everybody, just a quick thank you. Not only did we hit 15,000 subscribers on YouTube, which I'm very appreciative for, it's been a blast, but we also hit over 1,000 readers on the Behind the Street newsletter. So thank you, everybody who's been reading the newsletter that I send everybody every single Tuesday. It's just been insane. My goal when I started the newsletter was to have 500 people in the first year. We doubled that in 4 months. So really appreciate that, and thank you guys for reading. But one of the things that we've been writing about there is, the Fed is the main driver of the market, and if we look at the leaders or the stocks that are showing the most relative strength, they're stocks like Church & Dwight, which is a company that makes baking soda and toothpaste and toilet paper, and these stocks are showing the most relative strength. So to me, the only thing that could signal is that large institutional investors are making big bets on a possible recession. Because if we think about it like this, and this is how I think about it, and I'd love to know your thoughts, if we're seeing massive amounts of money pour into those conservative stocks like Church & Dwight that makes toilet paper and baking soda, if we go into a recession, I'm still going to need to buy toothpaste. I'm still going to need to buy toilet paper and just regular everyday household items. So I think a lot of investors out there are saying, look, probably a lot of these high beta growth stocks, if we go into a recession, there's probably going to be IT spending cuts. There's probably going to be all sorts of things. People aren't going to be spending as frivolously anymore. But the last thing that people are going to cut out of their lives is toothpaste. People still need to brush your teeth. Even though we have economic contraction, I'm sure the vast majority of Americans are probably going to brush their teeth. I think that's probably a relatively high possibility. People are going to still need to buy toilet paper and other common household items, and I think that's why you've been seeing stocks like Church & Dwight, Walmart, and Target show a little bit more relative strength in the market as opposed to some of the other high growers. But what are your thoughts on that? Hey, Dr. Mark in Texas says, Tom, if the Fed tries to curb inflation by increasing interest rates, won't that hinder economic growth? Doesn't seem like it's an easy, quick, simple answer. Yeah, you're 100% right, and I think that's why many economists on Wall Street... hold on, let me cross here. I think that's why many notable economists are saying, look, the Fed is in a really tight spot here, and we have to head uptown because I'm staying in the city. But they said the Fed is in a really tight spot here to where, okay, here's the two main problems. Number one, inflation. Massive problem. If the Fed doesn't do anything about inflation and doesn't raise interest rates, inflation is going to rip, but the economy will probably do pretty well. However, if the Fed doesn't do anything about inflation, or if the Fed does do something about inflation and increase interest rates, there is a possibility that inflation will decrease, but there's a very high probability that the economy will cool and potentially fall into recession. So it's definitely a big issue. It's definitely not a done deal, and that's why the term used on Wall Street is the Fed is going for a soft landing. So a soft landing would be to curb inflation while also not curb stomping the economy. Cindy Foley says, good night all. Gotta watch Blue Bloods final season stage ride, Tom. Hey, thank you. And enjoy Blue Bloods and enjoy your weekend. Yeah, NMB 045, exactly. Hey, Jay is here. Good to see you, Jay. Man, it feels freezing out. So this is 36th Street. We're walking up 6th Avenue. Line Sync is here. Good to see you. Tom AK. Welcome, Tom. 3T3 says Tom, Fed can't raise interest rates too much because the country's debt load will get out of control. So a lot of people are saying no chance for a soft landing. All right, let's try to cross the street here. You know, a lot of traffic in Midtown tonight for a quite rainy night in May. You know, I feel like this is more of along the lines of like an October night. It feels like October. Hey, Lewis here. Iris Lewis. Good evening, Tom. Good to see you. Daryl is here. This is hello from Chicago, Illinois. And good evening, Tom. Welcome, everybody. Gregory says the cars are talking to each other. Indeed. But if you guys want to continue the conversation and know more of my thoughts on the financial markets, obviously if you type !news, NEWS in the chat, the Nightbot will drop the link to the Behind the Street newsletter where you could sign up for free and join over 1,000 other fellow investors who work in tech, investment banking, doctors, lawyers, healthcare, who work in the trades. It's a good time. Iris Luce is it a rainy day? Yeah, it's raining tonight. I think it's going to rain all into tomorrow as well. And potentially into Sunday. Hopefully not, though. Hopefully not. Hey, Robert is here. I see Muhammad also. Hey, Muhammad. Good to see you. Yeah, so we had on that. So funny thing. So we had that follow-through day on Fed Day, right? So we had another follow-through day when the Federal Reserve was signaling to the market, or well, they did raise interest rates. We had a follow-through day, so I had to buy. I bought a couple things, but only risked about 1% of equity. And the next day, blown out. But you know, that's why you have to stick to the rules. And that's oh, hold on, let me sometimes these cars don't stop. Yeah, I think that was the fastest failed follow-through day yet. Chat says there was not a follow-through day. Wednesday Fed Day was, but it was a little bit of a shaky follow-through day. I think the vast majority of that volume, as I said, was probably short covering. So now I am, I think this is in my actively managed account. It's probably some of the largest cash positions I've ever been in to date. John Ellis has maybe changed the rules. Nope. So I'm an avid IBD canned slim style investor, because at the end of the day, if you don't manage your risk, you're going to ride these stocks down 70% and you're going to be blown out. You need to manage risk. So if you have a follow-through day and you just start to nibble at good profitable companies and you get stopped out, well, hey, you get stopped out. I mean, if you lose 7% on 1% of equity, that's like nothing. It's like scraping your knee. But there's going to be follow-through days that'll work, and the market is going to go on a tear, just like it did in 2020, and you are going to stumble into a monster. And that's when you have the 100% years, the 200% years, but just about being disciplined. But in my, what's it called? But in my retirement account, it's all indexed, and it's been that way since I was a teenager. But in my actively managed accounts, Very, very high cash allocation. John Ellis is waiting until the 50-day moving average crosses up. Yeah, I mean, that's another concern. I mean, the NASDAQ, the Dow Jones Industrial Average, and the S&P all sitting well below their key moving average. Faith is here. Good to see you. Hey, John Ellis says we're not on a bridge tonight. Yeah, not tonight. I was actually thinking about doing the Williamsburg Bridge tonight, but it's unfortunate because my battery is so low. So we're only going to be doing a quick stream tonight. So I apologize for that, everybody. Brad's brain is like, falling knives are fun. Yeah, I'm not trying to catch any fallen knives. Hey, Mickey Handles is following you on Google Maps. Yeah, so this is 6th Avenue. We're right outside the Salesforce Tower, ticker symbol CRM. Mark Benioff's company. They specialize in selling customer relationship management software. And they also acquired Slack, which was a publicly traded company under the ticker symbol WORK. Hey, DM is here. Says, hey Tom, Brian Park had several dance parties this week. You know, I heard about that. I was watching that on other fellow streamers' channels. Yeah, Paul says you'll have to buy a battery booster pack. Yeah, that's been long in the works, but the only issue is, you guys know, if I bought a battery pack, I think we'd be probably streaming for 6 hours a night as opposed to 2. I don't think we could do that. Hey, Roy S is here. Says, don't worry, Tom. Short streaming is not going to be less than 2 hours. Let's enjoy. True. But I am on 10% battery, and I think we may die soon. But here's a view of Bank of America Tower right here. Looks like these guys just made it across the street. Smee Media's like, I'm okay with 6 hours. Yeah, you know, I think the phone is sort of like an automatic cutoff point. But the reason why my phone was so low on battery is I was out filming some standalone videos in the rain, which I think you guys are going to like, so that'll be up within the next couple days. You know, the city looks awesome in the rain, so I think it's going to be some good footage. I think you guys are going to like it. Eric 20 says, does Salesforce provide software or data or both? Yeah, so Salesforce is one of the original SaaS companies, or software as a service companies, and they've acquired multiple companies. MuleSoft, I believe, is one. You know, in my previous company, we utilized Salesforce. Now I use a different CRM called Zoho. They are not public. They are a private company, but I used to use, you know, a CRM, Salesforce, and then that would integrate with ZoomInfo for our lead generation. And then we would also use a company called Outreach. I'm not sure if any of you, maybe who are in sales or in banking or something, on the sales side, who use Outreach. But it's actually a pretty good piece of software. Hey, Sammy says, oh, it's lovely to walk in the rain. Good to see you. Hey, Ruben is here. Says, good evening, Ruben. Welcome. Hey, Q50, Samsung has a phone with 700. Oh, I just lost your comment. For some reason, my chat just scrolled all the way up to the top.
Is that Tom?
Yeah, hey.
Hey.
Oh, Ann, right?
Damn.
Dude, hey, man. Good to see you, dude. Nice to see you, man. No, I don't care. You can.
Okay.
Well, what's up, Ann? How are you, man?
Hey, guys, look.
So this is
right here.
New York Life Vlog, man. Always good to see you. Dude, so Ann, I was walking around earlier,
Yeah.
filming like standalone videos.
Yeah.
My shoes are soaking wet. So you got waterproof shoes on. That's awesome.
Yeah,
Nice, man.
but it's still wet anyway.
Oh, really?
Yeah, a little bit.
Nice. Yeah, dude, I watch your stuff all the time. It's good to see you in person, man. That's
Yeah, I
awesome.
know.
And I was telling these guys one day, I was like, you got to teach me karate, man, for some self-defense.
Sure.
You gotta help me
Yeah,
out.
fine,
You gotta hook it up. Good to see you guys. Yeah, so this
He
is
never show you. Now I show you guys now.
good to see you. This is New York Life Vlog. Great guy.
He's awesome. You guys are you awesome, bro.
Yeah, you're awesome too, man. Yes, I'm gonna send you a message. I want you to teach me some karate stuff, man.
Yeah, well, we're gonna make a schedule. Let's see.
Oh yeah. Okay. Yeah,
Yeah.
that'd be awesome,
You
dude.
gonna send me by the Instagram.
Yeah, I'll send you a message because
Yeah.
it's being between New York City and Miami, all the stuff that's going on. I wanted to shoot you a message, but
Yeah.
dude, awesome to meet you, dude.
Nice to see you.
And have a great weekend.
Yeah,
I'm
you
gonna
too.
head uptown, so
Yeah.
we'll see you later.
Nice.
Yeah, so guys, that's New York Life Vlog. He's fantastic, great guy.
Guys.
And take it easy. I'll shoot you a message, all right? Yeah, guys, that's dude, that's insane. That's Ann from New York Life Vlog. Very cool. So I believe Ann is, I'm not sure the exact martial art, but yeah, I was thinking about enrolling in some jiu-jitsu classes in Miami, but then I'm like, yeah, I'll message Ann on the side and see what he's got. So in the works. But everybody, my phone is on 6% battery. So we may die. So we are gonna head up towards 59th Street, Columbus Circle, because I am staying in the city tonight. Yeah, Eric 20 says finally saw you on the other stream. Well, I ran into Action Kid as well in Miami, which was a good time. JD says jiu-jitsu sucks. Is that true? I don't really know much about martial arts, but it seems like everybody, whenever I ask around, says enroll in jiu-jitsu. So I'm not sure if that's the case. Andy is here. Welcome, Andy. Good to see you. Andy's joining us from South Korea. We'll try to scoot around this traffic jam here. Elliott Wave Review. Good to see you. Hey, Josie is here. Good to see you. Yeah, Jay Fox has a lot of crowds out tonight. I think it's because it's the start of Mother's Day weekend. Restaurants are probably going to be packed as well. It's just cameras. Says Tom, jiu-jitsu does not suck. Only someone who has been beaten up by, I would say, it does. Yeah, I mean, so that's one of the main ones I was thinking about. So there is a school, a very famous school, I think, in Miami, right in North Miami Beach. I was thinking about going to, but I just got to find the time. So I was been meaning to message Ann about it. Sunshine, New York City, good to see you. Welcome. JD says Miami sucks. I love Miami. I bought an investment property there about 6 months ago now. I can't believe it's been 6 months ago. But yeah, I split my time between Miami and New York. Miami is a fantastic city. Fantastic city. Very tech friendly as well. You know, Toma Bravo which is a private equity firm that specializes exclusively in enterprise software. Just opened up an office down there. I actually had the pleasure of meeting Orlando Bravo at the 2022 Bitcoin conference in Miami. Extremely smart guy, super sharp, has built an amazing firm. You know, I think they just acquired or just took private SailPoint, which is a cybersecurity company under the ticker symbol SAIL. So a lot of, and I think they actually were going to make a bid for Twitter actually as well. John, good to see you. All right, I think we are coming up on which street is this? 46th Street. Let me check how much battery I have, because I think we may be all tapped out. Hey, Lena Sandoval's here. Good to see you. Somebody says hello from the Upper West Side. How are you? But everybody, we are on 2% battery, so the phone will die in about a minute. But thank you everybody for joining, much appreciated. We will see you right back here at 8:30 Eastern Standard Time tomorrow, perhaps. So if you're new to the channel, feel free to subscribe, like the video. If you enjoyed the stream, and we will see you all right back here tomorrow as we stream New York City. Warwalker's like, no. Yeah, I mean, we started the stream, phone was about 30% charged, I think, when we started. And everybody have a fantastic Mother's Day weekend. Hopefully wherever you are in the country or the world, the rain will let up, the sun will come out, and we'll see you in the next one. Take it easy, everybody.